Welcome back to the Money Focus Podcast. I'm your host, Moses the Mentor. And on this episode, I bring you guys Michael Arries, who's here to enlighten us on the market for precious metals. He has over 25 years experience in trading gold and silver, so he's here to really teach us a few things. So sit back, learn, grow, and pay it forward. Let's go. Thank you, Michael, for joining the Money Focus Podcast. Really appreciate you taking the time out your busy schedule to come talk to us. First question I always ask is to please walk us through your career journey, your professional journey, and ultimately what led you to the world of precious metals. So the floor is yours.
Well, thank you, Moses, for having me here. I appreciate being on your podcast and for you taking the time to interview me. With my journey with precious metals, I guess I could sort of work backwards a little bit. So I work for a company called McIlvaney Precious Metals. They've been around 50 years as a family-owned company. So I've worked for them for 14 years now. But I grew up in the area of Southwest Colorado where they're based. And so my parents went to some of their conferences, got their newsletter, and we've sort of been into alternative investing for a long time, just knowing what's happening in the world, owning precious metals as something tangible and something as a hedge, and just starting that, back when I was a kid. So I've always been familiar with that. I started buying precious metals actually even 25 years ago. So, you look at silver and it's almost $30 an ounce now. I bought it when it was $5 an ounce a long time ago. So it's been a really good long-term investment. So it's just something I've always been into, always done, always followed the markets, kind of looked at economics in a more alternative way than what you hear on the mainstream news channels. And so, yeah, when I got the opportunity to work for this company that I've known about and actually, talk about something that I liked and was interested in, it made work less of a chore. So I've enjoyed being a part of that.
No, that's great. Appreciate the breakdown. Yeah. And, I ask this question. I mean, I know I'm kind of being upfront about it, but what are the core benefits of investing in precious metals versus other asset classes? Kind of walk us through that.
I guess the way to look at it, Moses, is that gold and silver are money. They are actually money. So if you want to have savings, if you want to have something for the future, if you want to quote unquote save your money, then save it in gold and silver. They are money. So, when you look at the dollar, you might have a $5 bill in your wallet and you say, oh, I've got money in my wallet. But no, the dollar is a currency. We can trade it for goods and services, but it's not money. All right. So my question for you is, what's the difference? What makes money money? What would be your guess? What makes something actually money?
It's something of value. Let me say that. That's
something of value. Yeah, I think that's a really good answer. That's exactly right. Gold and silver, they maintain their value over time. They maintain their purchasing power because they're scarce, because they're limited in supply. It's something that we can use as money. So with our dollar, since it's just a piece of paper or a digit on the computer screen, and the central bank can print it, add more all they want, and they print tens of trillions of dollars anytime they need to try to boost liquidity and loan out more money, that dilutes it. That makes it less scarce and that makes it less valuable. So when we see prices going up, it's because the central bank is printing more money. It's not greedy corporations. Sometimes it's scarcity of materials, but really the main driver of inflation and prices going up is the central bank just printing money out of thin air. So with gold, you can't print it out of thin air. You can't grow it on trees. There's a very finite amount out there. And it's something that is durable. It doesn't corrode or rust. So all the gold we have has been around for thousands of years. It doesn't go away. It's true. All there, and it's limited in supply. So it's something that's valuable and precious that all cultures and all people recognize as valuable. And it's limited. We can't just, you can't just go and pick some up off the ground. You would have to take the work and effort of getting it out of the ground yourself. If you watch those Alaska gold mining shows, those guys kill themselves and spend all their life savings to get a couple of ounces of gold out of the ground. So that value is built into it. When some mining company has pulled some gold out of the ground, there's a lot of oil energy and a lot of manpower that is built into that gold coin. So it is valuable. it is scarce, it is limited in supply. So that makes it money. That makes it something where instead of, you trading your cow for, my however many chickens or vegetables from my garden and trying to figure out how to make it work. Well, we've got a go between. We've got something to where, oh, this has value. I can take it anywhere and spend it. Gold's the ultimate form of that. Our dollar is a currency that's been around 80 years. Before that, the British pound was the world reserve currency. Before that, the French. Before that, the Dutch. It, lasts as long as, an economy or a government, you know, does things fairly well until they go bankrupt and have too much debt. Gold's been money for 5,000 years. So that's the main thing. It's money. It's the only thing that is money. And the reason you'd have it, back to your original question, is to have some part of your portfolio that is in money. If you're going to save for the future, don't save it in a devaluing currency like the dollar. Save it in gold and silver, where they keep their value over time.
So when you say, it's money, now, are you talking about only the physical gold, or could someone also buy into like a stock or something like that, or some type of fund? Is there a core difference on how people should approach that, or should they only look for true physical gold?
Good question, Moses. I tend to recommend that people have physical gold, have full ownership, full control over physical gold. That is your ultimate level of insurance and having money. So when you're talking about a stock, it could be a mining stock, or it could be an ETF that tracks the price of gold and silver. That's a speculative investment. That's where you've got someone else in between you and your gold that has to make it work and keep their promise. It's sort of it could be a fund that tracks the price of gold. That's not the same as owning the gold. You don't own the gold. You are, betting on the price and owning a paper promise. So when we're talking about having money, yeah, you want to own gold and silver coins or bars physically. You can store them at a depository. You can keep them at home, but you own them. No one else has a claim on it. And as much as possible, you have control over it. And anything else is just speculating.
Appreciate you clarifying that, because I watch the NBC all day and I see all these gold, ticker symbols, and I'm like, well, maybe I'll do that. So, all right, cool. What economic indicators impact the price of like gold and silver? What is something that we need to be looking out?
Yeah, I think probably the two biggest things are just inflation and, to some extent, interest rates. So when it comes to inflation, that's what we talked about before. The government prints money. The more money that's out there, prices go up. But the price of gold also goes up because it takes more and more of those worthless dollars to get that same scarce ounce of gold, the more they print of it. So, inflation, money creation, prices going up, that causes the price of gold to go up. And you could even look at it as the price of gold stayed the same and the dollar went down. If you see the price of gold go up a couple $100, it's just a reflection of the dollar actually going down and it taking that many more worthless dollars to buy an ounce of gold. But inflation will drive up the price of gold, and that's a big factor, a big indicator in it. If we have good policies, low debt, not a lot of money printing, gold's not going to move up in price. It's not going to look like an investment. It's just something like a private asset to own. If we have out of control money printing like we've had for decades, you're going to see gold go up a lot in price, and it's gone up 100 times in price since this central bank was created, if you can believe that. So that, and then to some extent, interest rates. It depends on the world situation, though. So generally, if interest rates are going up, something's going to pay more than just owning gold and not paying anything. So gold becomes less attractive. And in a world of zero interest rates, like we had, 10 to 20 years ago, well, gold's very attractive. Why own government debt that's not paying anything when you can own gold that's real? Versus them just adding more debt and not paying you any interest on it. So interest rates, to some extent, what's interesting is what we're seeing now is that interest rates are going up and gold's going up even more, because now it's a factor of lack of faith in our government's ability to pay off their debt, lack of trust in the dollar. Gold's actually had a big breakout move and gone up recently. So even despite interest rates going up since February of 22, gold's like, oh, well, now the government, with all their debt that they are going to have to even pay more interest on, now they're really screwed. So let's buy gold. So uncertainty, war, geopolitical factors, that would be the other thing where gold's just a safe haven asset. You own it, it's liquid, it's always there. So, if there's war in the Middle East now ramping up and government debt is too big, then it's like, all right, run to gold as a safe haven. And who cares if interest rates go up? We just want something that's actually going to be there.
Well, what about a lot of the things that you note as far as it being, that scarcity of it, and it's limited supply. I hear a lot of that when people talk about like cryptocurrencies.
Yeah.
Robert Kiyosaki, he says, that Bitcoin is like digital gold. What do you say to the people that say, well, you know what, I might as well just go the crypto route versus purchasing gold or silver or something
Yeah.
like that?
Yeah. No, gold still has other benefits above and beyond what the cryptocurrencies offer. So um, I have a preference for precious metals, but I'm not going to say someone shouldn't buy cryptocurrencies. I think they have their place as well. But they're not interchangeable, and a crypto is not going to replace gold. And here's why: gold is tangible. You can hold it in your hand. It's something real. And the cryptocurrency, it doesn't exist in our realm of existence, in our plane or our sphere. It's something you can never touch or hold. So yeah, I mean, there's a system, there's a network behind it, there's a limited number of those tokens out there. But I guess you just look at the track record. Gold's been around 5,000 years. It's been used as money through every empire and nation that has come and gone. The Roman Empire lasts for however many centuries. They devalue their gold coins by putting copper in it, and eventually people just go back to wanting gold, or whatever other country or empire, like the Florentine Empire. Well, oh, they've got a gold coin that is pure. We'll go to that. So gold's always been around as money, and whatever empire fails, we go back to gold. So it's got a 5,000-year track record of doing that, and Bitcoin's got a 10 to 15-year track record. So I would say it might be a great thing to own, but not at the expense of gold. Have some gold. You have gold as a foundational element to your portfolio. You always have some of that. It's inflation proof, it's durable, it's always there. So it's not gonna crypto's not gonna replace that. And if there's any computer issues, power grid issues, whatever, you still trade your gold as is. You can trade gold coins, silver coins for stuff, and it still works. So it's not one or the other, but it's not like you don't have gold, because that's always going to work.
Yeah, I'll take gold, silver any day over crypto.
Yeah.
I'm still leery of it.
Yeah.
I had someone on that talked a little bit about it and opened to more guests to come and share their knowledge, but I'm just not there yet. But let me ask you this: so someone, I believe in tangible assets. That's the reason why I invest in real estate. I have rental properties. So talk to me a little bit about the relationship of owning precious metals alongside having real estate. Like what is that relationship? How can they work together to build my portfolio?
Yeah, no, that's good, Moses. Yeah, I mean, you are a tangible asset guy. If you have houses, if you have real property, you like being able to like see what you have, be able to go and kick it or something. With your Bitcoin, it's like, where is that? Where is it stored? You can't hold on to it.
Exactly.
So that's good. And the precious metals are a really good complement to real estate, because it's a real asset, but they have different advantages. So with your real estate, you have cash flow, and you're growing your wealth with that cash flow, and that's great. Gold does not cash flow, but gold is very liquid and very portable. So, your rental house, you're not going to take with you. And if you want to sell it, it may sell really quick, or you might be in a certain time where it takes 6 months to sell it. Gold, you can sell any day of the week. There's demand for it all over the world, and you can sell it and get cash for it any day of the week. You're never sitting on it and are stuck with it. So you've got one real asset that renters pay you to have, and you've got another real asset that you could put in your pocket and run away with, and you can sell anywhere and turn it into currency. So they're both real. You can hold them, you can hang on to them, and they have distinctly different and complementary advantages. So
sounds like a plan. So it sounds like I need to buy some gold, right? Or silver. So let me just ask you that. I mean, so obviously gold is a more premium, right? But What are some pros and cons of owning gold versus silver? Like, does one appreciate? I would assume gold appreciates
Mhm.
faster, but educate us on the
Yeah,
relationship.
that's a good question too, because interestingly enough, silver is the better buy right now, and silver is probably going to make a bigger move than gold. They tend to both go up at the same time for the same reasons. Silver, interestingly enough, is probably a lot more scarce overall, where there's not as much of it to go around. Now, at the smaller price that it has, when you're buying it, you get a lot more ounces of silver, so it can be heavier and bulkier versus gold over $2,000 an ounce. You get a lot of value in a very small space. An ounce of gold will fit in the palm of your hand. So there's a lot more size advantage as far as being small and portability to gold. Silver can get heavy or bulky. But with silver being a much smaller market, it tends to have bigger swings up and down. So if we can watch those and play that accordingly, when they're going up on a major bull market trend, silver tends to outperform. It tends to make a bigger move percentage wise. So we want to have more silver than gold and take advantage of that extra growth. And when the markets are coming down for the precious metals, silver will tend to fall further, and gold will hold up better than silver on a falling market. So then we'd want to have more gold. And what we actually do at our company at McIlvaney Precious Metals is use that relationship and that change in relationship to our advantage and to our clients' advantage to gain free ounces. Because if you've got a point where silver is moving up faster than gold for a time, well, let's have more silver. And when it outperforms gold to a certain extent, and we'll track the ratio or the percentage difference and look at the chart over time, see where there's typical topping and bottoming patterns. When silver outperforms to a certain degree, then we'll tell our clients, all right, let's take part of your silver and trade it for gold, and you'll get extra free ounces of gold versus if you had bought gold originally. And then if they come down and that ratio goes the other way, we'll trade some of our gold back into silver and we'll get a bunch of extra silver than what we started with. So, really, you want to own precious metals foundationally, have a certain amount, whether it's 10% or 20% of your portfolio, have an amount that's foundational. But within that, we'll shift how heavy we are in gold or silver over time so that we get the most advantage out of it. When one outperforms for a time, we'll trade it for more ounces of the other and go back and forth. And basically, we're getting free ounces and building our pile over time. So, because they take turns outpacing each other, both are good. And if we're on the right side of the cycle, you sometimes have more of the other. And that's where you want someone that knows this and can advise properly on that to really get the most out of precious metals.
Nice, nice. What strategies do you recommend for someone who's just starting out? Should they tap into a company like the one you work for, or is there some research they should do on the front end themselves? Kind of walk us through like a entry level investor going into the precious metal world.
Yeah. No, that's good. It's a little bit of a wild west, Moses, honestly, because with stocks and bonds you have regulation through the SEC, but with precious metals there is no regulation. Anyone can buy it on the market, resell it, and charge whatever they want for it. So unfortunately, there are a lot of companies out there that tend to talk people into fancy overpriced coins and try to make a huge margin on it. And it's just not a good deal for them. It's a ripoff. It's not a good way to invest. And really the clue is if you see someone with a former politician or a Fox News anchor on their website or promoting them, it's going to be expensive. It's going to be overpriced. So that's one clue. But you want to pay as low a premium as possible and get the most ounces for your money. That's really the thing. So for contacting myself or contacting my company, we try to advise people on the best way to do it. The strategy with trading the ratio, like we talked about before, finding the right product to get the most ounces for your money and doing it for the right reasons. Some people need to pay off debt before they start investing, and some people may not be ready for it, or may be doing it for the wrong reasons or out of fear, or using the wrong vehicle for it. So we try to help people do it the best way for their portfolio, get the most ounces for their money, and then have that strategy in place so they can increase ounces over time and have something to do along the way, not just bury gold in your backyard and sit on it and forget about it. It can be a more dynamic place. So, there's very few places that talk about those things and help folks do it that way. And there's a lot of places that just try to overcharge on fancy coins. So for someone getting started, call me and I'll let you know what pitfalls to avoid, how to do it the best way, what's the best deal to buy, and how everything works. And I'd really just try to help folks do it the right way.
Where do they buy? Because I've seen on the news lately, where Costco,
Yeah.
they sold out on gold. So I mean, is there a good starting point for someone to even go buy gold, or just start with you?
I would say start with me, because honestly, I will give people the best advice and help people do it. So my company, McIlvaney, we buy and sell precious metals. So you can call me directly, Michael Arries. I'm sure you'll put my phone number up there, and it's someone can call me directly and I'll be their advisor and I'll help them do it. Because on the one hand, you can research online. There's all kinds of crazy articles out there. And maybe you find a website where it's fairly cheap, but maybe you don't know which coins to pick or whatever. So someone can try to do it on their own. I can make it simple and say, here's how much to do for your portfolio. Here's how to do it. It can be done through an IRA as well. If someone has a retirement account, you can buy physical metals through an IRA, or you can just, use cash in the bank and, have it delivered to you and keep it at home. But everyone's different. So depending on what you have, how much you want to do, what vehicle to use, we can figure out the best way. Get the right mix of gold and silver for where the ratio is at now and where the strategy's going, and just avoid any pitfalls, and then just know what to expect in the future. Like we may have one or two ratio trades. We might have another 5 to 7 years of this bull market finishing out, and then there's going to be a point where we want to sell our gold and silver when they peak out on this big uptrend that they're on, and there's certain indicators for when that'll happen. So just having someone watch that along the way who has been following precious metals for a long time, I think that's helpful, and that'll help you get the most out of it.
Makes sense. What about the volatility though? Like, is it something where, gold and silver goes up and down just as much as the stock market, or is it more stable?
I think it's more stable. Honestly, gold has outperformed stocks over the long run. Over the last 20 years or so, they've actually done better. It's kind of surprising.
I mean, kind of go to my question. I mean, most people say that stocks outperform gold, but it sounds like you're about to go into that over a span of time. It actually wasn't the case. So, definitely feel
Yeah, no, I mean, I was just looking at that this morning. So if you had really good timing and you bought the S&P at the bottom in 2009, so after the 2008 financial crash, if you picked the bottom and had held it to now, you're up about 6 times. So that's pretty good. Gold, on the other hand, if you picked the bottom, which actually wasn't terribly hard to do back in the early 2000s, a lot of different analysts were saying, yeah, this is probably the end of the bear market. It looks like it's going to go up from here. Gold's a really good buy. Gold's up 10 times since then. So, for anyone that's thinking, oh yeah, you want to buy stocks, gold doesn't do anything. Gold has done as well or better than stocks, depending on the time frame you pick, depending on which range or what date you start with. Gold was $250 an ounce in the early 2000s. Now it's $2,300 an ounce, and gold was literally $20 an ounce 100 years ago. Now it's over 2,000. So it's for the long term, for inflation protection, it is a good investment to own. It does have its up and down swings in between. It does make these big moves and can get sold off. Really, when you're just buying physical and just holding it for the long term, you're fine. There's still paper trading. There's still a futures market for gold where big banks and big hedge funds, they'll buy it and drive up the price. They'll sell it and push the price down. And there's big swings in between. But regardless of that, just owning it for the long term, it does well because our central bank has not stopped printing money. They've only ramped up their money printing. So it's been a good investment. And you could also argue, too, that a lot of that money printing has gone into the stock market and it's overvalued. It's disconnected from economic reality. So it's due to come down. It needs
Really,
to come down. And gold has not
yeah.
yet accounted for all the money we've printed to the extent that it does typically do so historically. So gold really needs to go up, probably several more times in price. Whereas stocks need to come down to get to reality with what our economy could actually support, not just with, the central bank printing money and big banks putting that money into stocks and things like that. It's just pushing up the price. It's interesting, Moses. Not even conspiracy theory, not even crazy numbers. Gold's at $2,300 an ounce plus right now. It could go to $10,000 an ounce, and that would literally be just it repeating its big bull market it had in the 1970s. If it does the exact same thing in today's dollars, it can go to $10,000 an ounce. So that would be a huge move. As much as it's done in the last 20 years, it can do that almost again in the next few years. Just accounting for all the money we've printed, and not any like crazy prediction that's outlandish. That would just be the normal math that it does. So it's still undervalued, still can go much higher, and a lot of other things can still come down a bit.
Sounds good. What outside of what you noted, what are there any other misconceptions that people might have about investing in precious metals that you would call out?
A lot of the misconceptions come down to what do I do with it? How do I get rid of it? How do I sell it? Who takes it? Do I take it to the store and buy groceries with it? Just things like that. It's honestly really easy to get rid of. So, for our company as a precious metals brokerage, we buy and sell it. We make a market for it, or we go to the bigger wholesale market and we can get rid of it at bigger clearinghouses and depositories. So essentially, you can always send your gold back to us and liquidate it, and we'll send you cash for it, whatever cash we're using. Besides that, I mean, you could go to any local coin shop or pawn shop and sell it any day of the week. They're not going to give you as good a price because they don't move as much of it, but you can still get rid of it any day you want to. Or you can trade it with someone. I've traded gold coins and silver bars for different people that knew what it was and were collecting it and traded for goods and services. So people still take it, and in the future that may become a bigger thing. So it's very easy to liquidate and to get rid of. I think right now we want to hang on to it pretty tightly and let this trend play out and let it go up in price. But one of the things people ask me the most is like, what do I do with it? Well, hang on to it, but when the time comes, you either trade with someone for it if we need to, or liquidate it and turn it into cash and use that cash to buy something else that's undervalued. So
Makes sense. And you mentioned coins. So are the coins by the ounce? How
yeah,
does it work? So is it an ounce per coin
yeah,
or?
usually things nowadays for modern bullion that's made at different mints, usually it's in the troy ounce, and a troy ounce is a little bit heavier than a normal ounce. Like if we weigh ourselves on a scale, it's a few more grams in a troy ounce, so they're a little heavier. But yeah, 1 ounce gold coin will fit in the palm of your hand, a 1 ounce silver coin, and then anything from there. Usually silver goes up into like heavier and heavier bars, like 100-ounce silver bars. And gold, an ounce is expensive, and you can get fractions of an ounce to get something cheaper, a half ounce or a quarter-ounce coin. So things like that. But yeah, really 1 ounce coins or bars. There's different government mints that make it. U.S. Mint makes the gold eagle. The Canadian Mint makes the gold maple leaf. Things like that, or just 1 ounce gold bars from various mints. Those are good products to have. And silver, just whatever has the lowest premium. 1 ounce rounds. They're nice coins with a picture on it that are from private mints. Usually a little less expensive. So 1 ounce rounds or 100-ounce bars. Just get something like that. Anything beyond that, might be too fancy and unnecessary.
Cool, cool. No, great information. Definitely learned a lot. What final thoughts or advice do you have for us as far as precious metals and just talk
Yeah.
us through that. The floor is
Yeah,
yours.
well, Moses, one of the big things is whenever folks are listening to this, right now we've had a big breakout in price the last few weeks. So, basically spring of 2024, gold has broken out above a big 3-year consolidation range on the price charts, and it is ready for another big leg up. And silver too is following, and it'll make a bigger move percentage wise to get back to its old high and beyond. and set a new high like gold already has. So, long term, we've talked about the long term reasons for buying, but right now in the immediate term, prices are taking off and they're going to leave people behind if they don't look at it and make a decision. Everyone should own gold. We've gone over the reasons why, but right now prices are starting another big move and are going to go to the next level higher, which might be $3,000 for gold and $50 for silver in the next year or two. So get them before they get more expensive. That's the thing right now. Is they're on a big new trend and they're not waiting for us anymore.
And how can we reach you directly to learn more about investing in precious metals?
Yeah, I would say call or text me directly. My work phone is area code 970 and then 459 and then 4611. It's 970-459-4611. You can call or text me there and we'll get in contact and set up a time to talk.
Perfect. And that's the best way. Any website you want to call out or social media?
No, that's the best way to do it. And then we can go from there.
Perfect. All right. Well, I appreciate you, Michael. I'm sure the audience, just like myself, soaked it up and learned a lot about investing and why we should invest for sure. So I appreciate you. And we're out.
Thank you, Moses. Thanks for having me.